zones in on
Where Sterlite Tech's share prices have fallen close to 60% so far in 2019, marking its worst yearly decline in the last 8 years. Now, this is despite a strong operational quarter reported by the company. Now, to discuss what are the concerns and how does the future look like for the company, joining us now on the show is Anand Agarwal, the Group CEO of Sterlite Tech. So, sir, to start off with, the latest rumor which has encircled Sterlite Tech is that the company might look to buy Reliance Communications asset, and this has also taken a toll on the share prices of the company. So, your view on the same, and is there a remote possibility of Sterlite Tech buying these assets directly or indirectly?
So, Amit, there is absolute clarity that Sterlite Tech is not at all interested in those assets. What we have learned, even the larger group entity which had expressed an interest in these assets had withdrawn their expression of interest last night. So, to start off with, Sterlite Tech was never even involved in that EOI. But there was a kind of a sister overall group entity, but they have also withdrawn the EOI.
Okay. The other concern that was there related to Sterlite Tech was a drop in fiber prices. But I remember in the first quarter call, you did say that the fiber prices have stabilized. But can you just give us some more details on how the prices are currently holding up? And secondly, how has been the demand for fiber across India, Europe and China?
Sure. So on the fiber pricing front, we continue to see stability on the pricing front. See, for us, we have 2-3 different levers. We have a lot of our products going in the form of cables. We have a lot of product going with longer term contracts. We have a lot of global diversity, and we have not only standard products but value added products itself. So for us, it gives us a great degree of stability in terms of the fiber pricing. If you recall, Sumit, we never saw an upswing in the price that we were seeing when the market was having those high spot prices up as well. We have been more a player which has longer term contracts with telecom providers, and to that extent, the prices for us have been slightly declining from that in the higher quartile of towards $8 to now closer to $7. It has happened over the last 3-4 quarters. On the demand question, that's something that we have been putting a whole lot of more focus on, that we see that there are certain projects, especially in China and India, which are getting a bit delayed in terms of their rollout. And that's a focus for us in seeing that how do we utilize our overall capacity, how do we make sure that the order books that we have actually convert towards revenue and sales, and with the capacity coming on board in the next 6 to 9 months. So the demand part is something we are putting a whole lot of focus on, and getting that converted to revenue and sales.
Okay, and if you see quarter on quarter, your total overall order book was also down by nearly 6%. So has there been a slowdown or some delays in order inflows that you were just mentioning? And specifically to government orders, has there been a slowdown on that part?
Yeah, so typically the fact that there are two large aspects of our business. One aspect of business is the products which we sell for all our customers globally, and then there is the services business, which is essentially built up of large chunkier projects. So at a macro scale, yes, this is a year where capex, what we see globally, is largely flat. And this is very typical whenever technology shift starts happening. So we saw that when 2G went to 3G, 3G went to 4G, when 4G is going towards 5G, people are creating their network plans, their capex plans, their rollout plans, and then they start spending the capex. So that overall capex globally, we see a sort of a pause in that front, especially on the telco area. And that's coming in terms of, to an extent, the way we see our order book also. But for us, the great part is that this order book that we have has almost like 1.6, 1.7 year of our current revenue run rate. So we still have a lot of steam to in terms of sales, in terms of revenue. by the time the customers catch up in terms of releasing newer, larger orders.
Okay, but the slowdown that you're witnessing in both your product and the service segment, when do you expect that to revive for the company? When are you expecting more orders to come in, Sean?
No, the orders are coming in. The orders definitely, so, as I've been saying, our perspective, we are not seeing much of the slowdown that we experience is more in the India-China perspective. Europe, different markets are in different rates. The data center market continues to grow pretty high numbers. So at an overall perspective, this is a slower year than last year. But as I said, we have good amount of order book for us to hold stead for another 1.5 years while we continue to book orders every quarter. So as you said, our quarter-on-quarter revenue increased, but the order book decreased by only 4-5%.
Okay. Lastly, sir, the Navy and the Mahanet order forms a substantial part of your service order book. How much of these orders have been completed so far, and when do you expect completion of both these orders?
So Navy, we have done close to 50%. It should get done by between June to August of next year. Mahanet, we have completed close to 30%, and it should continue till December of 2020.
Well, that would be all, sir. Thank you for speaking to Bloomberg Quint.
Sure. Thank you, Sumit.